Yo, what's up, guys? How you doing? This is Fabricio. Let me take off my spectacles. This is Camion, and I'm happy you guys are here with me today. So I want to share with you uh, my day trade for today with ES. Right, this is minis. Okay, and let's talk about it a little bit. All right. So um, what I saw today. Let me first show you what you see here before you. Right. So what you see here before you is the previous day high, right? This is Wednesday, right? Just to give you an idea of what I look for, right? So look, this is the previous day high over here, right? This is the previous day high right here, right? This is the previous day. This is the London session low. So with every session that happens, right, we go from New York session to Tokyo or Japan session into the London session and then back into it, right? So this is what I saw, guys, right? So I saw that yesterday we made it to this high point here, right? That's the previous day high, right? As we're going into London session, right? This was the London session low, right? Because it starts at 3 in the morning. That's why you see these vertical lines here, right? This is like a reminder. Okay, it refused to go to this low point, right? It hit support, is what we call, right? So going into New York session, right? This other horizontal is the London pre New York session high, right? So I said to myself, okay, right, this is on the 15-minute chart. So the reason why I look at the 15-minute chart, without getting too crazy with it, the higher the time frame, the more the zones or the areas, the price points are respected. Okay, so I said, okay, cool. So what I did, I marked off uh, the high point going into New York session and the low point going into a London session, right? The previous low point, previous high point. And this is how you use the basics of the Fibonacci retracement tool, right? But the way I use it, I use a specific setting called the golden zone, okay? And the golden zone, basically, the simplified explanation is if the market is trending upwards, right? Usually, the probability of the asset coming back to a certain price point is going to retouch a certain price point. And the golden zone gives us a visual of something we can see where the asset is going to come back and return to that zone. So this is what you see here. So going into my trade, that's exactly what happened, right? That this is exactly what went down. So I trade the 5 minute chart because my style for intraday is scalping, right? Where I'm in and out of the market quick. And if you look here, right, going into the session, right, this was the previous low, right? This was the previous high going into New York session, right? 9:30. This is the 9:30 candle, right? So this is why you mark it. Try to make it as accurate as possible. I think the hardest thing is learning how to, mark these up, right? So if you look here, right, that's a lower low. This is a higher low, higher high, higher low, higher high, right? So if you look here, right, where it came back to it already broke through this zone. It broke through the London high, right? And it came back to retest the fib, right? If you look at the fib tool, right, the box, you can see it here, right? It came to retest. So as soon as it broke out and it reversed and continued upwards, I took that trade. And this is the trade that I took to pass the evaluation today on TOPSTEP on a 50K combine account. All right. So the reason why I'm sharing this with you guys, because there was no guessing, right? We followed price action, market structure, right? Which is either it's going upwards or going downwards, right? Or going sideways. Uh, it respected the golden zone, which is basically a form of support. We're above the 50 moving average which is an indication to us as traders that the market is going upwards. And it made a bullish engulfing candle, right? Let me remove this so you can see what I mean. You see this candle here? It broke the previous high candle, broke the previous candle. Uh, so it went higher than the last one. That's a higher high. That's the basic of market structure. And this trade, I only went for a 1-to-1, and it netted me, I believe, $700, right? Which is all I needed to pass the evaluation. And now we're funded traders. And the reason why I'm excited about this and I'm sharing this with you guys is because, you know, you don't need to have a boatload of money, right? You don't need to, go into this unsure. Just follow your strategy and the plan and stick to it. I'll be honest with you, whenever I've gotten unexpected results or the results that I wasn't looking for, it's either A, because I didn't wait for the opportunity to show itself, like what you see here, or um, being upset, being hurt because I lost the trade. And, if you lose a trade and you're following your rules, that's okay. It's a probability, it's a chance of probability, right? But if you lose a trade because you just didn't one listen to your rules, which sometimes you do because you just you want to make money, you don't want to make money, right? Or you didn't wait for the opportunity, that's something else, right? But if you did everything right, then listen, it's okay, man. Tomorrow's another day, right? And does it take practice? Hell yeah, it takes practice. I'm not gonna lie to you. It's sometimes your emotions get the best of you because we're emotional beings, right? But the more time passes, the more I learn how to control my emotions, and I think that's part of the game. Part of being successful in the game and business of day trading, right? All right, guys, I hope this helps you out a little, but let me know what your thoughts are. If you need any help on how to mark up your charts, how to use the FIB tool, or how do I use the 50 moving average, or how do I find my key levels, right? Key levels is another word for support and resistance zones from the higher time frames, right? Let me know. I'm here to help. Listen, closed mouths don't get fed, right? And you can't expect different results without asking questions. And listen, I'm gonna be honest. You gotta, be consistent with this. You have to look at it every day. Look at it. Become familiar with it. Just like you can tie your shoe without the light being on, you're gonna be able to look at a chart in like 5-10 minutes or less and know which direction the market is going. You don't need hours to do that, but you have to train your eyes to see the opportunity, to see what's happening, right? That has nothing to do with an indicator, right? An indicator is just telling you what's already happened, but you can visually, physically with your eyes, and you can see what's going on with the market. You can take one look at this chart and say, okay, it's trending upwards. Why? Because it's pointing up. you know, Pretty oxymoron. But all right. I hope you guys got some value out of this. And remember, it's never too late and it's never too early. But you gotta get started. And I promise you, as soon as you get started, you're on your way. You're taking the car out of park, you're pulling the car out of the parking spot, and you're on the road. Where we go from there, that's totally up to you. I believe in you. Now you have to start believing in yourself. All right, guys. I'll talk to you later. Peace.